Good afternoon, ladies and gentlemen. Thanks for coming to our webinar. Sorry, we're just a couple of minutes late. The webinar today is talking about the introduction to HJ Collection 4. I'm Reece Mennie. I'm the CEO of HJ Collection. Hopefully you can see my slide about me. People that are on this webinar, some of you would know who I am and worked with us previously. Some of you are probably new to us. And haven't met me personally. Hopefully you will get to meet me personally, either meeting in the office or we do a lot of face-to-face events as well. So while you're on our database, feel free to keep up to date with our events and things that are coming up, and be more than welcome to come. As said, I'm the CEO. I've launched a number of successful companies, one being Hunter Jones Group, number two being HJ Collection, which we're talking to yourself about now. Big ass marketing and a boxing academy. Raised over 200 million from private investors. Been involved in developing over 1,000 units with a GDV of over 350. You should now be able to see the presentation. I believe that you couldn't see it. Hopefully you can now see what I was talking about. I've launched the companies that I just spoke about, raised over 200 million from private investors, been involved with over 1,000 developments personally, with a GDV over 350 million. 30 of them projects have been over the last 5 years, and a lot of investors that are on here that I can see have been involved with these with me. Also got a podcast out, Many Talks. Feel free to go through that. Featured a few football players, high profile. Rob Moore, very big in property in the UK. Grant Cardone, that's very large and does a lot of business worldwide, but mainly in the US. Very similar to what we do, but doing stuff in the US. So good interviews, a lot of information from them people that have been there and done it. So it's always good to have a flick through and listen to that, and always give us some feedback as well. What I want to talk about is, what the market, how I see the market and how the market is at the moment. The outlook for 2023 and obviously 24. We've seen mortgage interest rates the highest they've been since the last recession. UK inflation at the highest, around 8.7. Bank of England base rates 5%. They're the highest since the recession last time as well. Rising energy and living costs have gone up as well. So that's really the outlook which we've all seen in the last 18 months. What we're talking about today is HJ Collection 4. Previously, we've had HJ Collection 1 and 2, which was both successes. Why HJ Collection 2 was a success, and why we think HJ Collection 4 is going to be an even bigger success is because of the market conditions. But let's talk about why HJC2 in the first place. Good availability to commercial property, strong purchasing power in the fund by working with investors like yourself that lend us the money, meaning that we're a cash buyer. It means that we've got good purchasing power, good track record in the marketplace already from sources that find these commercial spaces, because they know that we're a buyer. So we get first refusal on a lot of sites that a lot of other companies don't. Some great relationship with existing contractors, and the desperate need for affordable homes across the UK. It's probably every one of us that's on this webinar have probably seen locally a lot of developments going on and a lot of things happening. In the UK, we need to produce around 300,000 new homes per year. On the last count, we're about 120,000 produced. So you can see that there's a deficit constantly, which means that the permitted development rights that we specialise in, the legislation that was passed some time ago, is a legislation that the government are helping developers produce new homes. So I'll talk about that more as we go. But the good availability to commercial property is because through the pandemic, a lot of people haven't gone back to office spaces. So what we've seen is a lot of availability in that sector for us to be able to convert from office to residential is what we specialise in. What we learned from HJ Collection 2, we listen to investors. We remain flexible, ensuring that all of our exit strategies remain feasible regardless of what's going on in the economy. And what I mean by that is we've got 3 exit strategies, which we'll talk about, because it's okay for investors to lend us their capital, and it's okay for us to produce these developments. But more importantly, it's about how we can get investors that partner with us to be able to get back out. And also continuing to make sure that our costs are relatively low and our valuations are in the correct place when doing appraisals, because we've all seen prices go through the roof in terms of anything that we're looking to purchase. So that's from materials and what we've done. But the way that we've been able to do that is because we're doing multiple developments at once. We can purchase bulk, which means that we can bring the cost down, because we are really building boxes inside boxes when we talk about the sites that we purchase. Once you've been, and there's again a few people on this webinar that have been to our various sites, once you've seen one of the sites, they're all very, very similar in terms of finish and spec. And that's because we buy all of our supplies in bulk, which means that we can reduce the price, and it keeps us in front of our competitors. And it also keeps us where we need to be in our appraisals, which means that we're feasible to be able to give the returns that we give to investors. So a roundup of sites that we've produced in HJ Collection 2. So you've got Walton on Naze, you can see the purchase price there and the GDV. Stafford, so you can see the purchase price compared to the GDV. All of these sites are well underway. So for investors that are invested into HJ Collection 2, you can see that the security level outweighs the investment. It was a 7 million fundraise, and once completed, GDV is going to be 21 million. And you can see, quite frankly, from the completion dates, that we're well on our way to producing all of these sites. So Stafford's pretty much done, Hanley's started, Lowestoft started, Ipswich and Bracknell are all well underway. So you can see that the security aspect on HJ Collection 2 outweighs the investors' funds that was put in. So all in all, the way that we've been able to produce these sites is by working with investors like yourself. When I spoke about the exit strategies just a minute ago, making sure that they all work and we remain a flexible approach, is because we've got the 3 exit strategies. Our main exit strategy and our main business model is to work with investors like yourself that lend us money for us to be able to go and purchase, acquire, develop and refinance. So what that means is we will purchase with investors' money, we will build out with investors' money, and then what we do, we will tenant them, and then we will go to a mainstream lender to refinance once they're rented out. So we are looking to retain 90% of what we produce. That is our main business model, to retain all of the assets. And the reason for that is because we're looking for the yield, a long-term yield play. So investors work with us. They have security over the assets until the time that it's refinanced. Now, normally in a 2-year period, we would do around 5 to 6 developments, which we will refinance. And what happens is the money keeps going into the pot until we've made enough money where we've refinanced on a mainstream mortgage, what the tenants are then paying, and we exit investors with the refinancing money. That's one exit strategy. The other exit strategy we have, which we have used, is selling the whole project sale. So that means the whole development, somebody similar to myself, an insurance company or a pension fund that wants a big yield income producing asset, would come to us and offer us to buy the whole site once it's completed. We've had that done previously, and there's still a lot of demand in the marketplace for that. The third option is individual unit sales. What I mean by that is we can section the site up into individual units, and we can sell them individual units to buy-to-let investors or any investor that wants them. We've done that on one of our sites in St Helens, sold out really quick. There's great demand for that. So that is another option that we can use if we opt to use. But as I said, going back to what we look for and what we do mainly, predominantly, we look to rent and refinance is our main exit strategy. And just to touch on the aftercare of my team, a few investors on here already, so they will know that, but for the new people that haven't, worked with us previously, we like to keep you up to date of what's going on. So weekly updates via email will come out to you. The marketing team works really well and really hard on making sure that you get the right information in a timely fashion so that you can see what's going on. We have a quarterly magazine for clients that gets sent out via the post. You can see in there as well what we're up to, what pipeline we've got coming, what sites we've got, frequent site visits. So you can come to any of our sites at any given time. Let us know. We can take you there, show you around, make sure there's somebody on site to be able to, show you around, make sure that you've got your high vis and what you need to walk around these sites because they are active sites. But we're more than happy to show our investors that are working with us these sites. And also 24/7 investment consultancy. So, you've got any of my team that you work with 24/7 to be able to answer any questions you've got or anything like that, even myself. So if you ever need anything, feel free to reach out and we'd always be able to keep you up to date. So moving on to HJ Collection 4, and why I'm really excited, to be honest with yourself, for the next 2 years is because of what I'm seeing in the marketplace. I just want to show you a couple of assets that we've purchased in HJ Collection 4 already. One asset's in COBHAM. Okay, you can see it's going to be 13 units. And the reason I'm excited about the next 18 months to 24 months is for a pure reason of, if you look at the purchase price, 2.10 million, it was actually valued at 3.2 million. Okay. So we're buying below market value, and I'm seeing a lot of this in the marketplace. So its real value when we purchased it was 3.2 million. So what that means to investors that are working with us is that there is already equity in that site considering what we've paid for it. So if we wanted to, we could sell it on at the open market value at 3.2 million, but we purchased it at 2.10. You can see development cost 2.10. So the total cost of that project is going to be 4.2 million. GDV, once all 13 sites are completed, is 5.3. That's asset one. And it's the same on asset two, which I'm going to show you as well in Weybridge, where we've bought below market value. And that's why I think the next 18 months are going to be a fantastic opportunity for us to be able to purchase below market value, because they're not distressed assets, but they're being sold in a distressed market. So what that means is people just want to get out of the marketplace. And it's a good opportunity for us now to purchase these assets and move forward with them. So asset two in Weybridge, Weybridge, very affluent area. This is going to be 26 units. The open value, and these values, guys, are not values that we've just come to. These values are from Royal Chartered Surveyors. The 5.5 million value that there, and the 3.2 million value at COBHAM. These are not just figures that I've plucked out the air. These are figures that if you are serious and you're looking to work with us, we will show you the valuations of these two sites that was done by a third party Royal Chartered Surveyor before we purchased these assets. And we paid 3.5 for this one. These two sites come from the same seller. So we had a deal to buy both of these sites, and that's why we got such a good deal at them. Slightly higher development cost, 4.3 on this one. So we're about 7.8 total costs, going to give us a GDV of just under 10 million. So they're two sites, two assets that are going straight into HJ Collection 4. So there's going to be some good level of security in this structured investment before anybody's really involved with it. The key facts and figures to HJ Collection 4, similar to HJ Collection 2, loan note size 7 million. The difference with this is there's two options. Well, there's three options, but there's two terms in terms of time frame. There's a 24-month and there's a 48-month option. Nationwide developer, the same security trustee that we've had previously, which is Blue Water Capital. They've been the security trustee across all of our bonds that we've raised and that we've used. They're an FCA regulated trustee. It's not an FCA regulated activity, being a security trustee, but they are a regulated company. So that should give investors, and it definitely gives us comfort that they do things in the correct manner and they make sure that all of their checks are done because they are a regulated company. We accept sterling, US dollars and euros into this opportunity, and the receiving agent is the same as it has been before, which is JM Kane Accountants, which is our accountant. So why do we, why do I believe that we can keep doing what we're doing and helping investors in this economic climate and helping ourselves? Is because we're keeping our costs low, as explained. And the way that we're doing that is we've now got a key team that works in-house on the contract side of things. So we run all of our own sites. We manage all of our own sites, and we bring subcontractors in to be managed by our own contractors. So we're in control of what the price is. We're not just on a rate of, if things go wrong, they can charge us what they need, and run over. We're in complete control. If you see the last magazine or the magazine before that, you'd have been introduced to Trevor, who's now come on as our contracts director. He's been around. He knows what he's doing when it comes to building. He's built a hell of a lot of sites out, and he's helped build the team out. We focus on areas where there's high demand for affordable housing. There's plenty of them areas around. And our layers of due diligence, we're increasing them. We're building our team inside HJ Collection so that we've got more people in more areas to be able to make sure that we don't leave any stones unturned. The offering itself, slightly different. We've upped interest rates because we've listened to investors. Normally on success, investors that have worked with me previously, before HJ Collection and into HJ Collection, with success, interest rates normally go down. But the economic climate that we're in, and from listening to investors, we thought it was only fair to match, or if not better, what's in the marketplace. So option one, you've got a 2-year income at a fixed return of 22%, which is 11% per annum. Payments are made 6 monthly. Option two is a 2-year growth. It's a fixed return of 26%, 13% per annum. Payments on maturity, so you get paid at the back end of the 2 years. And the third option is the 4-year growth option, which means your funds are tied up for a fixed term of 4 years. All of these are fixed terms. But the 4-year growth is a 68% return, which works out 17% per annum, and the payments at the back end on maturity. So they are the options of the note. The assets that I've explained to yourself are already in that note. So that's really the introduction. Hopefully I've explained what we do and what the options are and why I know and I believe that the next 24 months onwards is going to be a very, very exciting time, especially for purchasing. There's some great assets in the marketplace. We've got a pipeline of over 150 million GDV of sites that have been appraised, and we're ready to purchase if the funds come through at the right time and we believe it's the right asset at the time. Just because we've appraised the 450 million doesn't mean that we're looking to purchase the 450 million. We're pick and choose at the right time what asset to put into this opportunity. But the team are always looking at sites, and sites are there. We're happy to share them sites with you and show you what we've done. We're happy to share our track record with you, what we've produced. And as I said, we specialize in permitted development rights. So just an overview of, just before I finish, for people that don't know what we do, is we purchase an office space. We divide that office space up into different units, basically building boxes inside boxes. And then we will tenant them units, and then we will refinance them units on a long-term mortgage for us to hold that in our portfolio for income and yield-based investment. That's it from me. That's the opportunities. If there is any other questions, I'm just going to go through and see if anybody's put any questions in the chat. I'll answer a few questions before we finish. But again, thanks for your time. It's great for you to have come on this webinar. Hopefully you've found and you've taken some information away from what we do and how it works. But in the meantime, if you do have any questions, you can feel free to call in, email, speak to your account manager. any emails from me or calls from me directly, feel free, and I'm happy to answer them as well. So I'm just going to shut the screen down to go back to where I can get the questions or answer a few of these questions, and hopefully I'll see you guys soon. Okay, so two questions. One question is, sorry, there's a few questions coming through now. The security that the trustee covers. So the security that the trustee covers, they have a debenture over the whole SPV of the company. So what that means is they hold security over the whole company in terms of a floating charge. So any equity, any of the sites that are in the asset, the funds in the bank account, they have security over. So when we look to refinance, we have to show them that we've got another site to refinance into, or it's the end of the cycle to pay investors back. So that's the security that they hold. That's registered on Companies House, and it's in favour of Blue Water Capital. Another one. Okay, about the house prices. So because we're retaining and we're holding the assets, it's not really a concern that the house prices are dropping for myself at the moment. If we was looking to sell the units, then yeah, we would have to look in different areas, because predominantly a lot of our sites have been up north, where up north's going to get hit the hardest, like it did in the last recession, on purchase price, on selling price and purchase prices being dipped. There's no problem with that, because we retain, and most of our GDVs are done on a commercial basis on the income value instead of the purchase and the selling price of the assets. So another question, the original value. So what? Okay, good question. So in the valuation, it shows that there's some good price. Well, there's good equity in the site. So why not sell the site? Why not sell the site for the profit? We could do that if we needed to, but we would make more profit by building the site out and selling it. So, by building the site out, refinancing it and retaining it. That's what our business model is to hold, and build a business for income, and have these assets on our balance book. Our goal, and my goal, is to hit 500 million GDV in the next 4 years. Are HJ Collections accounts independently audited? No, they're not independently audited. Their HJ Collection accounts are done. They're not independently audited, but the valuations are independently audited, so they're not done by us of the sites. Somebody asked him what the minimum investment is. The minimum investment is £10,000 sterling, and increments up of £1,000. Yeah, so somebody's asked, I'll go back to that. Somebody's asked, they've joined a little bit late, so is it possible for us to send through the recording? The recording will be sent round to everybody, so that you can receive that. That'll be sent round to everybody that's been on here. Option 2 and 3, taking on developments in the environment. How are you feeling about development risk? Yeah, I mean, the development risk, we've reduced the development risk as humanly as possible. If we was building out the ground and we was a developer that was building from the ground up, we'd be taking on a hell of a lot more risk than what we are. The good thing about the developments that we do is, quite frankly, that we're buying buildings that are already there. So we couldn't physically buy we couldn't buy the land and build the developments for what we're paying for them. So long as they're structurally sound, it makes sense for us to purchase these and do the rip out and conversions. We're not really developing from the ground up. So our biggest risk, is inflation. But where we're buying in bulk, and all of our sites are very similar, it means that we can buy in bulk and we can cover what we need to cover. So yeah, we've looked at the development risk and we're pretty comfortable with it. Another question, just about the approximate loan to value of the loan notes to the value of the properties. It varies throughout the loan note, for the reason being, depending on where you are in the structure. So in normal instances, my opinion is the biggest risk is at the start of the loan note, because the assets haven't been purchased. But where in HJC4, there's 2 assets that are already in there, it's moving forward. It's hard to give the LTV at any given time, just for the reason being certain money comes in and development's being done every day. We try to keep it around 80 to 90% maximum. Don't like to go over that. If we do go over that, it would only be in the early stages of the development, because the quicker we get the development to where it needs to be, it gives investors more security. So yeah, sometimes in the early start of the two sites, let's say we were starting now ploughing money into the site, the asset value might be slightly less than the loan note value, but quite frankly, it wouldn't stay there for too long, because obviously once the development continues and how quick we're getting these sites produced, the value of the asset goes up. Just to give you an example, the site in Stafford, we've been on site for 4 months, and we're a month away from completion. So the loan to value on that at the moment, you know, is probably about 50% on one of them sites. Yeah, sorry, I meant increments of £1,000 to the 10,000. So once you've invested 10,000, you can do increments of £1,000. So 11, 12, 13,000. Approximately the value of the two properties that we're put into HJ Collection 4, on the presentation, we paid 2.10 for one and 3.5 for the other. So they are the actual values. No work has started on them sites yet. We've only just purchased them. That seems it for all of the questions, guys. There's not many other questions coming through. It's been a pleasure answering your questions. It's been a pleasure doing the presentation as always. We do a webinar and a live presentation, alternative dates. So as I said, stay on our mailing list, find out for when the next one's coming. Yeah, so no problem, Adam. Thanks a lot. And I look forward to catching up with you soon. But guys, yeah, thanks for coming on. It's a pleasure. And as I said, stay on our mailing list. Speak to my team for opportunities that are coming. Any questions that you've got, send them in. Happy to answer them. If not, I look forward to meeting you and hopefully working alongside you. And again, thank you for everyone's support. You've got us to where we are right now. We wouldn't be able to do this without the support of our investors. We're going to continue to do what we do. We've been successful in what we're doing. We're not looking to change anything that we do. We're just looking to work with more investors. And as I said, in the next 18 months to 24 months for buying, I think that it's looking very, very good at the below market value. Just one question, the third bond. So why we've jumped to HJ Collection 4, good question. HJ Collection 3 is a USA bond, so it's only open to the USA market, structured through Regulation D, and it's only open to the US market. So that's why you don't see much of that. It's a US offering. We're bringing the funds back from the US and we're using them funds in the UK as well. We're not building in the US. All of our developments that we do stay in the UK. Thanks for your time. It's been a pleasure as always. And I look forward to catching up with each and every one of you very soon.